Hi there, welcome to Kneppy Invest. It is right on 4:11 p.m. I actually had to say that as the clock ticked from 4:10 to 4:11 p.m. I have just come back to my computer just to see what's happened on the ASX today. During the last few hours, I have been watching some TV. In fact, I wanted to watch the series finale of Succession, and it sort of went the way I thought it might. And I won't give any else away, particularly for those who have yet to watch the series finale, or maybe even those who have yet to watch Succession. So a pretty good day overall, but a sad day that that series has come to a conclusion. Although in saying that, I don't really care for any of the characters. I just wanted to see who came out on top. But I would absolutely recommend that TV series simply because of the acting, phenomenal acting by everyone involved in that series. Anyway, I'm not here to discuss TV shows. I'm here to discuss what's happened on the ASX today on May the 29th. We're almost into winter. It's fascinating. The ASX is up, and it should be up because of the phenomenal day on the American markets on a Friday. We had to wait a few days before we saw those effects here. Probably had something to do with the debt ceiling. I've never worried about that debt ceiling. So a lot of people do get worried, but they always find a way, it seems like. And I think a pretty good question, and I don't know much about the debt ceiling. Pretty good question is, why not raise the debt ceiling permanently? Anyway, on to the ASX. So about 20 minutes ago, the XGO was up about 0.96%. We can actually have a look to see what it closed at. I'll just refresh it. 0.87%. So in the closing auction, it went from up 0.96% to down 0.87%. So there was a little bit of selling in the closing auction, which makes sense. A little bit of profit taking, I understand that. And when we look at the XGO right now, nothing to get too excited with. In fact, it's back up to the levels we saw at the end of closing on trading on last Wednesday. So this is not a good day. Well, in terms of it up 0.087%, whatever it is, 0.087%, whatever, it's a good day. But overall, this does not mean the XGO is in an uptrend, unlike the Nasdaq, which is just keeps on zooming higher every single day. It has definitely broken out, and that's on the back of Nvidia, Microsoft, Apple, and all those really big companies. Looks like they are definitely turning things around, particularly Nvidia's just gone wild recently. But I discussed that last week. Now, on today's announcements, that's the whole reason for me doing today's video. Let's go back to the start of trading today. Well, not trading, but when announcements start getting released, which is about 7:30 a.m. Australian Eastern Standard Time. So this is before I actually have finished my walk or run with the dogs. I usually get back here at about 8:30 a.m. Anyway, Sky City Entertainment Group, update on Sky City Adelaide. Did not have a look at that announcement. Just want to see how the market reacted, up a little bit. Metro Performance Glass, MPP, highly liquid traded stock. In fact, I don't think there might be like 3 or 4 buyers and sellers. In fact, there's 2 buyers, one at 9 cents and another one at 8 cents. Current share price is 12 cents, and no sellers. Shares in this company are illiquidly traded. This is the definition of illiquidly traded. If you watch Ausbiz The Core, they're always going on about these companies being illiquidly traded. They're not. This is an illiquidly traded company. I believe they are wrong because they say, well, it's only had 50 trades today. This very rarely trades. They had some trading on the 26th of May, and the previous day they had some trading was the 9th of May. So there was 17 days, not trading days, but 17 calendar days in between trades. This is not the sort of company you probably want to own your portfolio. However, in saying that, I did have a look at their announcement. Just want to see how this company is performing, and nothing too exciting. Now, this is not the sort of company I would even think about calling high quality. So this is their financial report. So $263 million of revenue, and that is up 12%. So that's actually a good sign. The first thing I do look for is revenue growth, but they were not profitable. Well, they were profit before significant items, interest and tax. Significant items and interest is very important for this company, as I'll show you in a second. So they actually were profitable before those items, but they were loss-making by over $10 million after those items. So let's dig a little bit deeper into the financials for this company. So sales revenue of $263 million. Gross profits okay, but they spent $47.3 million on distribution and glazing related expenses, $33.9 million on administration expenses. That seems a lot on administration. And probably the most important part here is finance expense. Almost $11 million on finance expense. So that's probably on interest of their borrowings. So this company does have borrowings. So let's have a look at the balance sheet. So not a lot of cash, $7.3 million of cash. Trade receivables up a little bit. Inventories up a little bit. Trade other payables down a little bit. So this company did have a bit of changes in working capital that were not beneficial for the cash flow of the company. In fact, complete other way. But the main thing I'm looking for here is borrowings or loans. You can see that in interest-bearing liabilities, in the non-current liabilities, $67.4 million there. Lease liabilities is $70.4 million. And the main thing when you look at this company, they have a market cap of about $22 million, and you have to take into account their borrowings or the loans, which means enterprise value is closer to $100 million. So again, not a reason, not a sort of company I would even think about taking a position in, even for the short to medium term if I was trading, just because of the illiquidity. Total equity only $75 million. So even you might say, well, it's trading well below in terms of market, well below its equity or its book value, but that's because of the debt. And even if you look at the cash flow in operations, positive 5.7 million, but payments for property, plant, and equipment, capital expenditure, was 6.1 million. Lease liability principal payment, 6.8 million. And yeah, interest paid, 5.7 million. Interest paid on leases, 4.8 million. So this company is burning through cash. In fact, cash on hand fell by about $6 million in this. Was this half year or full year? I forget. I don't really care anymore. Anyway, that's enough about this really small cap company, because the next company to release their full year results was Smartpay. And I would expect this to go the complete opposite way. This is, we'll just have a look at their announcement. Won't have a look at their financial statements. Revenue up 62%, EBITDA up 81% to 18.4 million. Profit after tax up to 8.5 million. Last year it was 2.2 million, so you could almost say it's quadrupled in 1 year. Net cash increased to $2 million. Monthly Australia acquiring revenue 6.2 million. So let's have a look to see how this company performed today. I'll be shocked if it didn't go up today. Yeah, this is a really nice looking chart, and it did go up, but there was a little bit of pressure today. So in fact, if we look at we'll look at the 3 minute data. So the share price actually opened at the high. So the retail investors were really excited when they saw the results of Smartpay, and there was a little bit of selling during the day, maybe some fund managers who saw some good reasons to sell out on this pop up in the share price on the back of these pretty good results. So I don't have to delve much deeply or more deeply into the results for this company. Market cap is now approaching, well, about $350 million. And I think this company will always be compared to Tyro. Haven't looked at Tyro for a while, but there is a big difference between the charts in both companies. So let's have a look at Tyro. Probably compare the two. So this is Smartpay, and Tyro, TYR, is looking uglier. Yeah, uglier. So Smartpay is doing things right. Tyro is not doing things right, just based off the chart. So congratulations to Smartpay. We could have a very quick look at the preliminary. No, they've only got a presentation. Preliminary fund report is only 1 page long. So obviously a 290% increase in profit. So obviously the actual financial results are not price sensitive. Kelsian Group, STB, acquisition, regulatory approval. I don't care about that. Anything else interesting? Those are the two main interesting ones at the start of trading. And there was something else interesting otherwise. Oh, that's right. ALS Ltd. I don't know anything about this company, even though it has a fairly large markup. $5.9 billion. Share price down 3.7% today on the back of their full year results. And if you don't know what a company does, sometimes all you have to do is open up a presentation or results and they will sort of tell you what they do. So one of the things they do, in fact, a lot of times, if you don't know what a company does, all you have to do is go down to the bottom of an announcement, like right here. They have it a little about ALS Limited section here. So ALS is a global testing, inspection, and certification business. The company's strategy is to broaden exposure into new sectors and geographies where it can be a leadership position. That means nothing to me, that second bit. But the first bit is global testing, inspection, and certification business. I did have a very quick look at the announcement, and they talk about commodities and life sciences. So I'm going to have to do a little bit more research into this company. Let's just have a look at the chart, because I don't know anything about it, and I want to know as much as I can about most of the companies on the ASX, if that makes sense, particularly these larger cap companies. I want to know more. And I think one of the main reasons I don't know anything about this company is if you look at the short term, the share price hasn't done much. But if you look at the long term, share price actually has been an uptrend since about 2016. Although if you go back further, it does look like it's cyclical. And the bottom of this cycle here was 2016, which tells me that was the bottom of, say, the iron ore cycle, mining cycle, which does tell me this company's performance, financial performance, is dependent on the mining cycle. However, if you take the long-term view here, share price is going from the bottom left to top right. So I probably should do a little bit more research on this company. Price earnings ratio, 22.6, dividend yield, 3.2%. And just looking at the last 5 years, revenue has been going up in a good line. I should write this down. Do more research on ALS, because I've never looked at this company in the past. So this is one of the reasons I go through these announcements. To find ideas, that sort of thing. Osco Healthcare to acquire healthcare and communication business, down 3.7%. I know a little bit about that company. It doesn't have a high market, 39.3 million. It is profitable, that sort of thing. That's why I've had a very quick look at that company, but I'm not that interested. And I don't really care for acquisitions either, because research has shown the majority of acquisitions companies make are not beneficial to shareholders. And that is definitely true for larger cap companies. It's less clear if acquisitions are beneficial or the complete opposite of beneficial for smaller cap companies. And Osco Healthcare is definitely a smaller cap company on the ASX. Another company that released their half-year results today, or full-year results, I think it's half-year results. A bit further up is Select Harvest. Here we are, Select Harvest, right about 9:50 a.m. Absolutely horrible results. So you might be thinking, by the way, I am a shareholder of this company now. And there's one reason I'm a shareholder of this company now, and I'll talk about that in a second. So when you look at the results, you might think, oh, wow, the share price of this company is going to be absolutely hammered. Revenues down 11.4% to 60.8 million. Loss making to the tune of 96 million. And if you have a further look at the financial statements, nothing too exciting in it whatsoever. Going through all the commentary here. I know I have to go all through the commentary. So equity down to 431 million, which makes sense because they lost $90 million. Cash flow negative, operating cash flow negative by 26.7 million. They also spent 13.6 million on capital expenditure, $2.9 million on tree development costs, increased their borrowings by about $50 million because burning through a lot of cash, only on cash at hand of $2.3 million, it looks like here. So why did I take a position in this company? It's because it's at the bottom of the cycle. This is a commodity company. And the best time to buy commodity companies is at the bottom of the cycle. And you might think the share price took an absolute dive today. I can tell you right now, more than likely, share price did the opposite. Yep, so 8.7%. And just have a look at the close for Select Harvest. Up 8.72%. Why did that happen? Not only that, I know this for a fact. The share price down. So actually, look at the 1 minute chart. So again, the retail investors got this completely wrong, just like they got the other company wrong. So which one was it? Smartpay. They bought on open, and that was share price high for the day. For Select Harvest, complete opposite. Retail investors sold because they saw the financial performance. So, no, this is horrible. They sold on open, and that was the low of day. In fact, share price kept on increasing during the day. So on open, the share price fell about 1%, maybe even more than that. Share price 436, open at 422, so about 1%. And the share price was up nearly 9% for the day. So why is the market and why is the market excited, and why did I take a position in this company? I've already mentioned it's the bottom of the cycle, and they sort of pointed that out in their. I did have a look at this. They sort of pointed that out in their right at the end of their announcement, somewhere here. Financial year 24 outlook. Okay, almond prices firming. They had a chart in this or graph in this that shows that almond prices have come off a low and are starting to increase again. It may not be in a straight line. China, India demand levels increasing. Global inventory levels reducing and US crop challenged. That's another tailwind for this company moving forward. Food megatrend supports almonds. And their 2023 crop was well below what they would have expected because of negative weather conditions in Australia. And those negative weather conditions are cold, cloudy, that sort of thing. So what's happening or going to happen? More than likely El Nino. So forecast shift to El Nino, weather pattern is favorable or positive for almond growths, farming imports, water availability favorable, fertilizer prices reducing, increased bee movement, which is very important for almonds as well. I always want to say almonds, but it's almonds. Yield set to rebound, tree health positive. So even though this company had a really bad financial year 23, I think this is going to be a really good year for Select Harvest. And because it's the bottom of the cycle, that's why I took a position. We know it's the bottom of the cycle. Just look at the weekly chart. And if we go back through time, you can see 2015 was really good for this company. And they've had bad years in 2016 and also in 2023. And the share price is at an historic, maybe not historic low, but at least a 7-8 year low, because again, it's the bottom of the market. And who knows, this could be a record year in terms of pricing for almonds. Now, I could be completely wrong, but the whole reason you buy at the bottom of the cycle is because you limit your risk to the downside, and the upside is actually quite high. This has been a very successful strategy for me in the past to buy companies, mining companies or commodity companies at the bottom of the cycle. And I think that could be the last of the announcements, because that's where I finished. Finished my day, not day, but finished my trading day at 10 a.m. And Terrace Technologies had an AGM. I think I've done a video on this company before, but no reaction from the market. Let's have a look at other announcements today. This is all new to me. Beamtree, nothing exciting at the moment. Ooh, Top Shelf International Holdings went into trading halt last week to do a capital raising, and this is a massive capital raising. Capital raising to raise $40 million. Now, why is that huge? This company has a market cap of 22 million. So shares on issue should triple. Triple. This is a massive dilution for current shareholders. So this is not a good. And not only that, their chart has been awful. Look at that. This is the weekly chart, by the way. If we look at the daily chart, it's just fallen off a cliff. This is like the worst timed capital raising you could think of. If they did this capital raising, say 6 months ago, or say in November last year, they could have raised at above $1, say $1.25, maybe $1.25, but definitely about $1. Now they're raising when the share price is like 18.5 cents. So let's have a look at this particular capital raising. For Top Shelf, they make liquids like whiskey, stuff like that. I drink whiskey, by the way. So $35 to $40 million equity capital raising to reduce debt and provide for a fully funded business model. Reducing debt, I completely understand, but why not do this capital raising 6 months ago? Okay, so currently there is 84 million shares on issue. Last close price, 26.5 cents. Offer price 25 per share, which is actually more than what the share price is now, which is about 20 cents. So this is a significant, this capital raising is actually at a premium to current share price. So the market doesn't like this at all, seems like. Is that right? Let's have a look at ComSec. We'll get confirmation. The share price is 20 cents. Yeah, 20 cents, down 24.5% today. The low for today was 17.5 cents. Am I reading it right? Well, I'm reading this right. It says the offer price is 25 cents. So the share price right now is significantly below the offer price. So if you're a shareholder, why would you partake in this capital raising when you can buy shares now at 20 cents at a discount to this capital raising? And they're raising approximately 35 to 40 million or 150 million shares. So again, the shares on issue are going to almost triple. So going from 84 million to 234 million. So that means at a share price of 20 cents, that means the market cap of this company is now 46 million. So before this particular capital raising, the market cap was say 22 million. Now it's 46 million. But less debt. Repayment of debt principal, 15 to 20 million. They should also include a pro forma balance sheet. That's what I'm interested here in. So pro forma cash up to 33.4 million, borrowings down from 32.3 million to 12.3 million. So a much better balance sheet. But again, why do the capital raising now? Were they thinking about this, or have they been thinking about this for a while? The chart suggests the market was very concerned about the ongoing concern for this company. Just looking at this significant decrease in share price since the start of 2023, where it's gone down from $1.25 to a current share price of 20 cents. So we're talking about an 80% decrease in share price. So interesting capital raising from Top Shelf. Probably all I'll talk about them for now. Vertex down 21.4% because, again, they did a capital raising. You can see what happens when companies do capital raisings. I don't know anything about Vertex Minerals at all, probably because they're a mining exploring company. Let's have a look at their chart to see if this looks like they're a recent IPO. Charts all over the place. So, yeah, a mining exploring company should do a capital raising whenever they can. So, yeah, whatever. And is that it for today? Spectre Limited, I like a placement. In loan reduction, share price up 20%. Well, that's complete opposite to those other two companies that did capital raisings, but this was a placement, which could be a little bit different. So let's have a look at this placement. And why I'm looking at Spectre, I actually am interested in this company because their market cap's like $5 million right now. So they've reduced one of the loans, and a $500,000 placement has been conducted at last trade price 2 cents among existing top shareholders and staff to fund the repayment with the remaining 50,000 to be used for working capital purposes. So that's why share price is up. The capital raising was done at 2 cents. Share price now 2.4 cents. Main reason behind that is just the debt. Less concerned about that debt. 4D Medical, completely oversubscribed capital raising, $25 million. And IDP Education, response to ASX price query. What's happened to them today? Down 14.8%. We'll have a look at that. And again, this company released no news today. So we don't know why in the market, the ASX said, why? And they asked IDP Education, why is the share price down 15% on no news? And let's see if IDP Education said this is, what's the best term for this company? This is a market darling, particularly among fund managers love this company for some reason. I don't know why. Okay, so let's have a look at C. Okay, the company notes that Immigration, Refugees and Citizenship Canada published on its website a decision to recognise additional providers, blah, blah, blah. Decision is not expected to have any material impact on the company's financial year 23 revenue or earnings. And so the first question is, are they aware of anything? And the IDP Education says no. And then question 2 is, if it's no, then is there any explanation that the company's management might have that can explain the significant decrease in the share price? And that's why they mentioned this Immigration, Refugees and Citizenship Canada decision on their website. So a really interesting day. Usually you don't see that sort of share price decrease for a company. Was it IEL? For a company that is so beloved among fund managers, I still don't understand. Maybe, look at that. Gee, that looks, something happened. Something definitely happened today. Massive volume as well. So PE ratio is still 54. Not a great increase in revenue over the last 5 years. Even if you go pre-COVID to post-COVID. I just don't understand why. And maybe it's just the share price decreasing. Maybe it's just one fund manager who just got out en masse today. So if you have any idea why IDP Education went down a lot today, I'd love to hear about it. I don't have any idea. So let's have a look at the top gainers and performers on the ASX today. Or maybe we'll just do XAO or ordinaries. So IDP Education, worst performer. Bought long year, second worst performer. Best performing company. Is that Leo Lithium? They did do an announcement today. And then Carnarvon, Rio. Appen up 10.6%. Whoa, Appen, go, Appen. What's happening with Appen? Nothing too exciting. Oh, there was a little bit of selling today. Not sure. So the share price was up even higher than 10% at one point today. Share price got up to $2.92 today. Oh, what's happening with Appen? So that's those who sold out on the announcement of that capital raising at, say, $1.90 are just kicking themselves right now. Appen. Whoops, the wrong one. Smartpay's fifth best performing company. Aries Resources, 6% best performing company. I actually do own both these companies in my portfolio. And we have AFG, Smartpay, another good performer, Peninsula, which is uranium, Tyro. Oh, Tyro had a good day. This is an association effect. I was going to say bystander effect, but it's a little bit different. That's just when you're bystanding near someone and something good happens to them and you get effects of this. This is association effect. Smartpay had good financial results, and that's maybe why Tyro's share price rose 6.4%. Okay, Hansen Technologies up 6.2%, another company I own in my long-term portfolio. I might end it right there because I might get, my head might just explode because of really good stuff happening to shares in my portfolio. And then one of the reasons I'm looking at the XAO and then this site at Market Index is because Market Index includes all companies on the ASX that are more than 1 cent. So those includes companies that are not on the XAO, not on the XSO. So I want all companies on here. So best performing companies, Cooler Gold. I believe they released an announcement today. And if you don't know if a company did release an announcement today, all you have to do is go to new lithium. It seems like every single time I have a look at why a company's share price increased significantly, open up the announcements, and it's all to do with lithium. Lithium is still hyped up to the max. Every single company now on the ASX is a lithium exploring or producing company. Fintech Chain, Inca Minerals, Market Herald, which I believe owns Hot Copper, Westar Resources seems to be on this list a fair few days. And there's Leo Lithium, Unith, Spectre. Someone actually recommended I look at APM Animal Health, up 12.5% today, and there's Appen, Hillgrove Resources, Drop Sweet, up 10.9%, and I've done a few videos on that company. So again, I am a shareholder of that company, so I'm very excited to see Select Harvest. There we go. And then worst performing companies, Top Shelf is the worst, Vertex, which I've mentioned, third worst, Swift Networks, Fireblade, blah, blah, and there's IDP Education in the top 10 worst performing companies on the ASX today. And overall, you don't want to see one of the companies performing really bad when the overall market is up almost 1%. So I think that's it for today's video. If you have any questions about any companies I've mentioned in today's video, I'd love to hear your thoughts, your questions, blah, blah, blah. So leave in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak into your own financial needs. That's it for this video. Have a good day. As I look at the selling in Appen today, this is the 1 minute data. A lot of buying on Open. Look at the first hour. Share price went up to its high in that first hour, and then the share price went sideways. What happened that first hour? Massive volume as well. Someone got excited. Anyway, that's it for today. Have a good day. Bye.